We're a little over 90 minutes into the start of trading here on the day. Stocks are slipping today, failing to keep up with the momentum from Friday's rally on the heels of a strong jobs report. Investors watching for the next big catalyst for the markets, and that is earnings. To discuss what themes you should be watching, we've got Keith Buchanan, who is the GLOBALT Investments Senior Portfolio Manager. Great to have you here with us, Keith, as always. You know, as you think about some of the themes that could prevail over the course of this earnings season, as investors are looking to what catalysts will be next. I mean, it seems like the flame on AI is starting to peter out a little bit. So where else does that kind of shift some of the attention to in this broadening out we've been talking about?
Absolutely, and thank you for having me. We've done a lot of work in this regard, and what we've noticed is the expectations for earnings have started to accelerate from mid-single digits to next year to mid-double digits. And this fourth quarter, coming into this fourth quarter, is really a transition quarter from that lower healthy growth to robust growth. And a lot of that comes from not only being, of course, healthy growth from artificial intelligence and all those industries and companies that benefit from that trend, but also a widening of earnings growth, revenue growth that you can see beyond the traditional growth sectors like technology, consumer services. That's actually moving out some to industrials, energy, and that's a more breadth to the earnings growth, which gives it a lot more stability over the near and longer term. So we're really excited about what earnings prospects there are. We've started to broaden some of our risk to get more access and, frankly, a lot more exposure in a relative sense to those sectors that have been forgotten, and valuations reflect that.
You know, it's interesting. Over the course of this morning, especially as we've been teeing up the outlook for the final quarter, and then what themes could prevail even going into 2025. We've heard everything from utilities to industrials and manufacturing. What are your top picks or your top sectors that you are kind of positioning around and placing a little bit more strategy around going into, and as we've kicked off this fourth quarter and then have the outlook into 2025?
And that's different from what we've seen over the past year, where a lot more focus has been on AI and the NVIDIAs of the world that seem to benefit from this trend. We're looking towards the traditional, call it even, I hate to say the V word, but the value spaces that offer a little more bang for the buck when it comes to potential for return and earnings growth per the valuation that you have to pay for it. So we're looking at financials as being one of those that has already started to benefit from that trend as far as the investor interest is concerned. We'll also see spaces in industrials, consumer discretionary, those spaces that have been left behind, frankly, from a return standpoint, and those valuations are miles away from where they traditionally trade on a relative to the broader S&P 500. So we're looking at spaces outside of what's kind of been talked about as the best names and best ideas over the past couple of years. And those have started to lose some relative steam. We want to make sure our clients are exposed to a broad array of names, not just focused on those names that have done well over the past couple of years.
Keith, as we continue to evaluate, a multitude of events that seem like they're taking place, I was kind of thinking back to a friend of the show's tweet that I saw this morning, Ryan Dietrich, and he had mentioned the S&P 500 being up 34.4% over the past 12 months, ending in September of this year. And you think back to how many times we've been told that something bad is happening right now, whether it be elections or the events over the course of this year, as we've had more than half of the world's population expected to participate in elections, or you've got wars, you've got, of course, just 7 stocks that people have been focusing on. All these things considered, are any of these events having or continue to have a more outsized impact on the trading strategy that you are recommending to clients right now?
Absolutely. We take all of that into consideration when we make our changes and have our position for our clients. When you look back to where we were in 2021, perfect example of kind of how we are viewing the world right now. Had a tinderbox of port issues. We also had Russia on the border of Ukraine. That invasion kind of made inflation, which was widely thought of to be transitory, no longer transitory. Right now, we're having issues, of course, a brief resolution last week. We're having issues as far as port availability and also some backlogs associated with that. We have a sprawling conflict in the Middle East, very resource-rich part of the world, just like Ukraine and Russia. So we're taking note of just how similar those time periods were, as well as the geopolitical conflicts that could really light a match to what seems to be a tinderbox of risks that could be more widespread than we assume right now, which was the same case in 2021. So all those are taken into consideration. We don't necessarily make election trades per se. We want to take all of the incoming information that we have that could affect the consensus of where we're going economically, monetarily over the next 2 years, and take that into consideration when we're thinking about the long-term approach to our clients' assets.
Keith Buchanan, who's the GLOBALT Investments Senior Portfolio Manager. Keith, always a pleasure to grab some time with you. Thanks so much for hopping on with us.